Welcome to the Deep Dive. This is where we give you that shortcut to really understanding the stories shaping our world. Today, we are plunging right into the global mining industry. Specifically, we're looking at the key developments between July 26th and August 9th, 2025. Our mission really is to pull out the most important nuggets, maybe some surprising facts, and those aha moments from the latest Skillings Mining Week in Review report. It's, a key source for industry intel. Think of this deep dive as your way to get a comprehensive but still concise understanding of this really crucial sector.
Absolutely. And you'll see how these recent events, they really do underscore some major strategic, economic, and honestly, some pretty profound social shifts happening globally. It really highlights just how dynamic, how interconnected this industry still is.
Okay, so let's start with that big picture view then. How are the major mining companies adapting? What are the market forces doing? We're seeing quite a striking trend, actually. Major firms think Rio Tinto, BHP, Anglo-American, Glencore, they're cutting dividends. And the main reason seems pretty clear. Falling earnings, mostly because iron ore and coal prices have dipped. But, is this just weakness?
Well, not really. What's actually insightful here is that it doesn't look like a retreat at all. Instead, it seems to be a very deliberate, strategic redirection of capital. We're seeing this clear pivot towards, long-term, future-facing projects.
Like what specifically?
Well, for instance, you've got BHP putting, $7.4 billion into its Jansen potash venture, and Rio Tinto, a massive $13 billion iron ore replacement plan. This really signals a strategic shift by these big players. They're trying to lock down future resources, moving away from just short-term payouts to shareholders. Even with market uncertainty, they're investing in the next decade, not just, the next quarter.
That is a huge shift.
Yeah.
It makes you wonder, though, how does a single company actually put that kind of thinking into practice day to day? Let's take Glencore, for example. What are they doing? Is there something particularly insightful there about this adaptation?
Yeah, Glencore is a great case study here. They've laid out this really ambitious plan. They're aiming to save $1 billion by the end of 2026, mostly by streamlining operations. But the challenge for them is, despite a 26% drop in their first half copper output.
Why the drop?
Lower ore grades primarily. So they're digging up the same amount of rock, but getting less metal out. That drives up costs naturally. But despite that, the company is actually sticking to its full year production forecast.
Okay, so how are they pulling that off then, if copper's down?
Well, they seem to be offsetting that challenge because their cobalt operations are still performing strongly. And crucially, their trading division is doing well too. This points to something broader, I think. These mining giants are relying more and more on diversified portfolios and these sort of sophisticated trading arms.
So the trading buffers the mining side.
Exactly. It often buffers the operational bumps in the road, making those traditional production numbers maybe less indicative of their overall financial health than they used to be. It's really about optimizing the whole business model, not just digging more stuff out of the ground efficiently.
That's a great point about diversification. Okay, so while financial strategies are changing, another critical area is, geopolitics around essential resources. Let's shift focus a bit to rare earths. Hugely critical for supply chains, right? The latest data out of China shows exports actually fell 23% in July, down to just under 6,000 metric tons. That was after a peak in June. But what does that month-to-month jumpiness really tell us?
It's interesting to watch, isn't it, that volatility? Because despite that July dip, if you look at the first 7 months of 2025, total exports were still up, about 13% year on year. We are expecting a more detailed breakdown, especially on magnet exports, around August 20th. But what's insightful here, I think, is how China's continued dominance, even with these short-term swings, kind of underscores its power. Could it signal strategic stockpiling? Maybe subtle market shaping? It's hard to say for sure, but it definitely impacts tech supply chains globally long term. It sort of dictates terms for manufacturers way beyond China's borders.
Yeah, absolutely. Okay, beyond the economics and geopolitics, there's always the human cost in mining. It remains starkly real. There was a tragic incident in Chile recently that serves as a powerful reminder of that safety imperative. Could you tell us about the El Teniente collapse?
Yes, that was just a truly somber development. A major tremor hit, causing a collapse at the El Teniente copper mine. That was July 31st, and the impact was devastating. 6 workers lost their lives, and about 3.7 kilometers of tunnels were damaged too.
Terrible. What was the immediate response?
Well, the state miner, Codelco, immediately suspended contracts with all the third-party contractors involved. That suspension is running until at least August 13th. It's just a stark, tragic reminder of the hazards, the persistent dangers in underground mining. And it really throws a spotlight on how critical, robust regulatory oversight is and, rapid emergency response protocols. It's about protecting lives, a tragedy that just underscores the daily risks these workers face.
Indeed, a heavy reminder.
Yeah.
Now, let's move across to Peru. Mining is absolutely a cornerstone of their economy, but it's dealing with some significant social and political complexities. The government there has some pretty ambitious plans, right? President Dina Boluarte is apparently considering approving 134 new mining projects, worth something like $6 billion. And there's talk that small-scale formal mining could bring in over $5 billion in annual sales by year-end. But beneath all that potential economic upside, there's quite a bit of friction, isn't there?
Exactly. There's considerable underlying social and political friction, and it definitely complicates those ambitious economic goals. We've seen reports that informal miners in Peru's Cusco region, they've actually suspended negotiations with the government. This is over an August 17th deadline they were given for properly storing explosives. And the situation potentially leaves around 20,000 miners excluded from a really crucial formalization program.
Right. And is formalization always the answer? Or does trying to formalize things sometimes create its own problems? What's the bigger picture there?
Well, it's an incredibly delicate balance. You have to remember, over 50,000 informal miners were already excluded from formalization previously, and negotiations are still ongoing with about 31,000 others. So this latest situation, it really highlights that challenge. How do you balance the economic benefits of bringing miners into the formal system with the resistance you get when the compliance rules are strict or maybe perceived as unworkable? It definitely hints at the potential for protests, which had paused back on July 15th to perhaps start up again. It just shows how complex it is to integrate such a large informal sector without causing significant unrest.
Okay, so we've covered a lot of ground. Financial shifts, Glencore strategy, rare earths, the tragedy in Chile, the complexities in Peru. What does this all mean for you trying to make sense of it? Let's zoom out a bit. Can we pull out the major themes connecting these individual stories? Give us that coherent picture of the mining industry right now.
Yeah, I think we can. When you synthesize these different developments, a few key analytical insights really emerge. First, there's that strategic shift in investment. We talked about it. The industry seems to be moving away from just short-term payouts towards long-term future-proofing.
Right, investing in the future.
Exactly. Second, geopolitics and supply chains. China's influence on rare earths, even with the ups and downs, remains pivotal. And at the same time, you see countries like Peru actively looking for new investment to drive that mining-led growth.
Okay, two big ones. What else?
Third, that tragic Chilean mine collapse serves as a stark reminder of safety imperatives. It just underscores the ongoing hazards and the absolute need for strong oversight. Fourth, the social and political friction we just discussed in Peru. It really highlights the complex challenge of dealing with informal mining. Formalization has benefits, but it can provoke real resistance.
That tension is clear.
And finally, number 5, Glencore's efficiency drive reflects a broader industry push for consolidation and optimization. Cutting costs, trying to maintain production targets, even when facing challenges like lower ore grades. And the key thing is, these themes, they're constantly interacting. They don't exist in isolation. It makes the mining industry just a fascinating, constantly evolving case study in global economics, resource management, and frankly, societal dynamics.
That's a great summary. We've certainly covered a remarkable range of insights today, from those big global financial shifts and geopolitical plays, right down to critical safety concerns and complex social challenges on the ground. We really hope these distilled nuggets, these insights, give you a clearer, more comprehensive understanding of this truly vital global industry. Thank you so much for joining us on this deep dive.
And maybe just one final thought for you to consider as we wrap up. As the world keeps pushing towards new technologies and those technologies demand ever more minerals, how do you think the industry is actually going to navigate that? How will it balance the urgent need for supply with those equally urgent demands for safety, for social equity, and of course, for environmental responsibility?
Definitely something to ponder. Keep exploring these multifaceted topics on your own. Thanks again for tuning in.